We start off with oil crude jumping as 2 oil tankers were attacked in the Gulf of Oman. The White House blaming Iran for the assault. Hadley Gamble is in the UAE with all the details on this developing story. Hadley.
Good evening, Melissa. So essentially what we've seen over the last several hours is an intensifying of the rhetoric on both sides of this issue. U.S. Secretary of State Mike Pompeo coming out and attacking Tehran, saying they are responsible for what happened to these 2 tankers off the coast of the UAE, off the coast of Iran, right in the middle of that Gulf of Oman earlier today. Now, this is a story, of course, that we have been tracking since around 6 a.m. local time. It's now after 1 a.m. here in the Persian Gulf. Let's listen in to what Mr. Pompeo had to say.
Taken as a whole, these unprovoked attacks present a clear threat to international peace and security, a blatant assault on the freedom of navigation, and an unacceptable campaign of escalating tension by Iran.
The Secretary of State there saying that this is part of an overall campaign of escalating tensions. You got to remember that just a month ago, 4 other tankers were also under attack, 2 of them Saudi tankers. And it was interesting to note how slow the administration and even the Saudis and the UAE as well were to technically blame Tehran on this. And the feeling certainly here in the Gulf states and back in Washington, according to my sources, was they didn't want to come out too strongly and really make the situation worse. But certainly that isn't the case today with those strong words from the U.S. Secretary of State. Just to give you a quick run through of what we saw over the last several hours, the first indications that we had that something was really, really wrong in that very, very busy shipping lane, one of the busiest in the world, was around 6:10 a.m. when one of these tankers released a distress call. This was picked up, of course, by the U.S. Navy, who are based in Bahrain with the 5th Fleet. They responded to that distress call. There was another distress call after 7 a.m. as well. Both of these tankers, their captains essentially saying that they were attacked, potentially even by a torpedo. There were flames in the air. The crews had to be evacuated. That was something that the USS Bainbridge took part in. They got those crews to safety. But it's interesting as well, I think, to note the noise that we've heard out of the Gulf countries. We've heard, other than one condemnation by the Saudi oil minister for these attacks, it's been pretty light in the criticism from these countries like the UAE, like Saudi Arabia, and that's kind of unheard of, frankly, in the last several months in particular. They've been pretty strong in terms of them attacking Tehran, certainly with what we've seen coming out of Washington as well. And the president tweeting very shortly after the Secretary of State's announcement that while he very much appreciated the efforts of Shinzo Abe, the Japanese prime minister, to really mediate with the Ayatollah, he personally feels that it's too soon to even think about making a deal. He says the Iranians aren't ready, and neither are we. Now, that is a very, very different tone, you'll remember, from what we'd heard from the president even in just a few weeks ago when he was saying, hey, just pick up the phone and call me. So tensions here in the Gulf running pretty high, and we're going to continue to bring you this developing story. Guys.
Hadley, thank you. Hadley Gamble in the United Arab Emirates. It's been a wild ride for crude as OPEC just yesterday warned of weak oil demand, which sent the commodity crashing to 5-month lows. Tim Seymour, put this into, a jump of 2-3% off of 5-month lows.
Oh, yeah. So look, the response in spot prices of Brent or crude, whatever you're following today, was kind of disappointing when you consider that we're actually oversold to begin with, or at least look at the charts. And the charts will show you that you've actually got Brent looking at basically a downward sloping daily moving average on the 50, 100, and 200 for the first time in a long time. Remember, it takes some time, and all 3 now downward sloping. You might even have a death cross setting up. So that is what it is. In terms of the fundamentals, are oil prices a function of supply, or are they a function of demand? And I think it's ultimately a function of supply. And I think this is a case where that's the bigger issue. The demand that OPEC pointed out yesterday is a concern, and they also pointed out that 5-year supplies on OECD supplies are up at 5-year highs. So, look, with a dollar that I think can also go higher, the near to medium term for me on oil prices looks challenging.
Yeah, I mean, it was uninspiring, right? If you were able to shut your ears off and not hear anything that happened today, you would look at the oil price and say, you know what, a 2% rise after 4% move yesterday? No big deal. It's just an oversold bounce, and it's probably going lower. So you look at it, yes, it is a supply issue, but to Tim's point, it is very concerning. Oil, energy, that is the economy. Whether we want to switch to solar or not, we still depend on oil and energy to run our economy, and the lower that goes and the less demand for this that there is, that means that the global economy is getting weaker. So it's certainly a concern here. I don't think oil is done going down. We might get a little bit of reprieve for the next couple days, but I'm still a seller of oil.
So slowing demand basically trumps anything that's going on right now in the Middle East, in your view?
Absolutely, 100%.
Yeah, and I think it's really interesting. So we had these 4 instances in May where we had tankers that were attacked, and Hadley just said to us there was just, a lot of people were very slow to point any blame. Today, the U.S. State Department is placing blame without any evidence, and that's kind of awkward, too, at this point to put, we don't want to see global macro tensions kind of ramp up here. So if you guys are telling me that you think oil's weakness up until today was a demand issue, and then you think about just everything that's going on in rates, and you say to yourself, man, the 10-year Treasury yield's back below 2.10, and what is that indicative of? Is it indicative of a further dovish Fed, or is it indicative of just global growth and the way people feel about it? And you say to yourself, those are 2 bad things. And then the last thing you just said is you think that Dixie could go higher. It sold off 2% from those recent highs. We had a breakout in the Dixie. That's not good for oil, and then we have rates going the opposite way.
I'm concerned that it's an economic issue, not. I mean, maybe a little supply demand, but I'm concerned about the economy. I'm actually sort of surprised that the market traded decently today. I understand the response in oil itself was muted, and so maybe this will be just a tiny blip. That wouldn't be surprising at all. However, it just seems to me the market is a little sort of on eggshells somewhat. And, I don't know that anything really happened on trade today to make it better. I'm concerned. I'm concerned about the economy. The volatility index, I would not close to selling puts at all. Anything, I'd be a buyer of more of them. I think it was just more pain to come. We'll start to see when companies report. I think FedEx, maybe next week, 26th. I don't know. We'll start to see.
One of the things that I feel like I was saying in September, which didn't end up being entirely accurate, but I said I thought the Q1 2019 was going to look like Q1 2016 light. So it wasn't going to be, but remember, oil got down to, in January 16th of 2016, down to $28 a barrel on Brent. All commodities were caned. If you look at the commodities, and I just think this is happening a little bit later, and I think it's a function of where we are with the trade dynamic. And so I think we are still fighting this global growth headwind. But look at copper prices. Look at the CRB Rhind. Look at the CRB index. In other words, other plays on commodities. Watch Glencore, which to me is a levered commodity play. And as we talked about with the dollar, despite the fact that I think the euro actually is cheap to the dollar on a PPP basis, and that's purchasing power parity. If you look at the politics in Europe, and if you look at where actually Germany has been in terms of the recession and the bullets that the Central Bank of Europe does not have, I think the dollar it's not going a lot lower in my view. I don't know that it has to go a lot higher, but in that environment, and in a safe haven bid, it's a difficult time for commodities. It just is.
And then just to add that to, this is one more piece of the uncertainty that we have out there, right? We don't know how this is going to impact companies, the trade war. How much are they cutting back? Can they plan for the future? Now we've got an uncertain geopolitical situation in the Middle East. We've got uncertainty about commodity prices. Now we've got uncertainty about currency prices. All of those things add up to a really tough time for stocks.
So can I flip this question around then? I mean, what does it tell you that the stock market actually managed to finish the day higher when you're introducing this new risk, this geopolitical risk into the fray, and nothing happened today?
Well, here's the thing. The S&P, believe it or not, is up 15% in the year, and it's within a couple percent of the all-time high. So you say to yourself, we sound pretty downright awful about it. Equity markets have done pretty well here. I guess what I would take you back to is, again, Q4 of 2018, when there was a lot of optimism about a G20 meeting and a meeting between President Trump and President Xi. And we thought we got an announcement about something, whether it was a kick the can down the road or some sort of deal that our president was touting. We are much farther away from that. And when you think back, when we got back after the G20 in early December, the stock market dropped 10% in the next few weeks, okay? So here we are back at all-time highs, or very within that. And the best case scenario is that we get a push out at the G20 later this month.
Right, so no new tariffs.
So you tell me how the stock market's going to take a push out of really a deal that a lot of people want to have.
Or how a stock market's going to take a Fed that between now and the end of July, and it's not that far away, we're going to have digested 2 Fed meetings, and we're really going to have a sense of whether this Fed is ready to cut and be, as far as I'm concerned right now, it's a Fed that's going to be tactically cutting, because I understand the mandate. I understand we've had guests come on, talk about the leading economic indicators. I realize there's a lot of places that you could make an argument we're heading down. There's no question.
I think a cut's already in. I think a cut is priced in.
Well, it's priced in, but that's not necessarily what we're going going to get, right?
Right. So there's a risk there.
Yeah, huge risk.
Yes.
Huge risk.
Okay.
We're at 87% by July.
Right.
And we get
That's
nothing.
the point. That's the point.
If we get nothing,
the equity
or
markets,
that's it.
The equity markets want the Fed on their side. They've arguably taken the Fed and assumed the Fed is on their side, and I'm not sure that's what we're getting.
And just to Dan's point, listen, the market is up, but that's exactly the time that you need to be the most cautious, right? So while we might sound somewhat bearish, I think we all kind of do sound somewhat gloomy. You just need to be cautious if you have those profits, particularly in this environment. And then look over the last year, we've traded in a range effectively. It's been a huge range, but we've traded in that range.